I'm John Kaiser at the Metals Investor Forum in Toronto, February 28th, 2025. I am here with Jason Weber, CEO of Silver North Resources. Jason, welcome to Toronto.
Thank you very much. Glad to be here.
So your flagship project is Haldane Mountain. It's in the Yukon. It's to the west of the Keno Hill District, which Alexco worked on for the past couple decades and got bought out by Hecla a couple years ago. And Hecla's now trying to get mill feed up to capacity of the mill that they have there. Now, this stunning district, which has been around for 100 years or more, has yielded 200 million ounces of silver during its lifetime, and these are high-grade ounces, sometimes 1,000 grams per ton. In Haldane Mountain to the west, it also has evidence of zinc, silver, lead mineralization. Yet here we are, 200 million ounces extracted from Keno Hill. Hecla takes it on and thinks there's a lot more to recover. Why has Haldane Mountain been this sort of nothing burger where nothing really important has been found in mind? At the same time, all this stuff, even though the host geology that the quartz sites with the structures running through it are present.
Yeah, it's a great question. In fact, here we are 100 years later, and we can find brand new discoveries at Haldane. So this is the exciting opportunity for us, and I think it comes down to the fact that the valley that the majority of the district sits in is a glacial valley. So you've scraped off the top layer of oxidized, weathered vein material that you wouldn't see the galena that is the obvious host of silver mineralization. With that scraping it away, the old timers were able to find this mineralization right at surface. There are a couple spots down low in the valley at Haldane where we did have a little bit of glaciation, and you can find galena, and the old timers did right around the same time that they found the original Keno Hill deposits. But the majority of Mount Haldane actually sat above the glacier. It's unglaciated, so we still have that layer of oxidized, weathered material over fresh sulfide vein material, and that makes the challenge of finding these a little bit tougher. The other part of that too is, back in the early 1900s, to move that material 10, 15 kilometers over to the mill at Elsa was a much tougher task than it is today. With a truck, you can move that in a matter of minutes. It would have been a long haul horse and buggy back in the day. And so Mount Haldane kind of sat off to the side, not a lot of exploration, a few spurts through the 20s, the 60s, a little bit for tin tungsten in the 80s. And then it was really kind of 2008 where people actually came back to look at the silver potential there.
So the weathering that's happened in the region, it oxidized whatever mineralization, who knows how many 100 meters deep. In the Keno Hill area, glaciers came along and scraped away much of this oxidation. This is all in the last 100,000 years only, whereas the weathering took place over many longer time period. So they have fresh sulfides pretty close to surface that guided them there. And Haldane was spared the glaciation, but that means there's this 100, 200 meters of oxidation. Why does the oxidation pose an exploration problem for the original explorers or prospectors?
Well, I think what we see on surface now is we might see a fault structure that we think, hey, that might host a vein. But when you go up to sample it, you're really sampling just sort of rusty, weathered material. A geologist look at it and say, that might have had sulfide in it at one point. And so when you go sample it, there might be a little bit of lead in there. Lead tends to stick around. Zinc is very mobile. It moves off with the weathering. And you might have a bit of silver. But when you're talking about an average grade of 1,100 grams plus silver being mined at Keno, and you're finding 150 to 200 on surface in this weathered, rusty looking material, it kind of just gets passed on. And we're only understanding now that 200 grams on surface can actually be very meaningful as to what could be at depth.
So once you get beyond the oxidation level, and this requires deeper drilling, of which there's been 31 holes or so drilled total.
Yep.
And you've drilled about two thirds of those over the last five years.
Yep. Yeah, and in that we've made 3 new vein discoveries
Yes.
in those 20 or so holes.
So you've set yourself a 30 million ounce target. The reason you've set that is because you want to be cautious. You haven't had a lot of money to demonstrate it. But when Hecla took over Alexco and decided to revive this system, which what apparently wrecked Alexco was they thought the silver grade would diminish at depth and it'd be more a zinc lead operation. They'd sold much of the silver as a streaming royalty, and that kind of killed the story because it didn't get weaker at depth. It's actually richer at depth, which is interesting for Haldane project, which if I understand your earlier comments, it's really the same system east-west or to the west of the Keno Hill area, except whatever is good there is deeper, is harder to find. The 30 million ounce target is something that Hecla could acquire you for and truck it to their mill, maybe pay 50 cents to $1, which is not a huge valuation, but still from where you are now, that's 5 to 10 times higher. So if that's the outcome, I'll take that. But what if there is a mirror image potential to Haldane that's been hidden because of this oxidation, the failure of the glacier to scrape everything away? From what you understand about the surface area and the number of vein structures or fault structures with these potential jogs that host the high-grade lenses, what kind of percentage of that mirror could you see as the dream potential of Haldane?
Well, when we took the project on, the first thing we said is the old timers found these veins. We think there's more here. We've got a nice package of this material to explore. Let's go and see what we can see using geochem and other more modern methods to find more of these, so that our idea is that if kind of an average Keno deposit is 20 to 35 million ounces silver, let's see how many of these we can find. So at our main fault discovery last year, we think we got one. We think we can see that there. But then we have Middlecoff, we have West Fault, we have Bighorn, and we've got a couple other targets that we haven't got to yet that, each of these could be another one of those. So we could see, with some luck, over 100 million ounces of silver in deposits that would sit on the Haldane property. And that was kind of the exploration target in the outset. It's a leap, it's a stretch. These are early stage targets, but that's what we're looking for, so that it's significant to Hecla, that when they see that, they're going to want to add that to their portfolio.
So you don't see potential for, say, a number of these repetitions getting you eventually up into the 100 million ounce potential, so that maybe it's a half a mirror image? You think it's going to be limited to this 30 million ounce target?
I don't, one of the things that we have to do is some geophysics to try to get a better handle on the structural architecture. Until I see that, I'm not putting any cap on how big this could be.
Okay. So last year I had you here. We spoke in this room a year ago. You wanted to raise $3 million to do a major program at Haldane. Instead, after your stock, I think almost doubled after this conference, everything tanked. It was one of the worst years in a long time for the resource juniors. You did get a drill program going. You managed to drill 3 holes, and something extraordinary happened. These targets are difficult because you know where the fault is, but the lenses are in these jogs or local disruptions in the fault, and figuring out exactly where those are is not so easy. Yet when you drill these holes into the main fault, which had just some smoke in it before, you nailed high-grade mineralization within that main fault. So all of a sudden, this fault is fertile, as you already know the West Fault is. Do you see that 30 million ounce potential within that main fault? And what's your strategy going back in there in terms of expanding these 2 intersections that are up and down dip from each other?
Well, I think it's twofold. One is we really, as I mentioned, want to do some geophysics to try to outline the fault architecture. Geophysics is difficult here, and identifying just mineralization, it doesn't really work. But if we can get the fault architecture, that helps us determine maybe where these jogs are, maybe where there's these linkage structures between faults that tend to be wider, higher grade zones. But at West Fault itself, just looking at the grades that we've hit so far, and we've got, a couple meters true width of 1,000 grams silver. We've got 0.83 meters of 2,470 grams silver with almost 10 grams gold with that. A really neat intersection for us, not something we see all the time. But just looking at that, we've got about a 30-meter wide zone in the lower hole of the two holes we drilled at Main Fault this year, that if we step out on strike, say drilling 50-meter fences along this, we could see if this holds together kind of in the range of 30 million ounces coming together. So that's what we'd like to do next, is that geophysics program, follow that up with drilling these fences to test this Main Fault. The other key for the Main Fault for us is that it sits a little bit shallower. We're hitting mineralization in kind of the 140 to 150 meters down hole, and we're getting within that 30-meter package 3 different high-grade veins. So now we're testing 3 veins with a drill hole at a shallower depth than, say, at our West Fault, where we're getting similar style mineralization. It's just deeper, and we're hitting 1, maybe 2 veins at a time. So the Main Fault really kind of opens it up for us to now quickly, maybe not get a resource, but start to wrap your arms around how big of a silver deposit you might have in this location.
Now, another project that you have is the TIM project. It's in southern Yukon, part of what they call the Silvertip District. Coeur Mining operates the Silvertip zinc, lead, silver mine on the British Columbia side of this district. You optioned this project to them. They can earn 51%, I think, by spending $5 million. And then they can go to 80%, leaving you with only 20% by delivering a positive feasibility study over 3 years. Now, I'll circle back to this a little later. But the first thing is, this year they did do a 6-hole drill program, and the press release sounded like they were very happy. They were talking about barbecue rocks, and I was wondering, what is this, some sort of grill event out there? And they haven't published assays yet, but that doesn't seem to be important. They paid their $75,000 to stay in the game. What did they learn from that drilling at TIM this year that makes you optimistic that they will go to 51% in due course?
Well, I think the big thing is, you mentioned the barbecue rock. They almost use fugitive calcite veins, these veins, calcite veins that fluoresce under UV light, called barbecue rock, colloquially. They use that as a proxy for mineralization. And it's really just in the process of when you form these CRDs, you're taking carbonate out of the rock, removing it, depositing your silver-bearing sulfide minerals, and then that carbonate has to go somewhere. So it gets deposited outboard of the sulfide deposit as these calcite veins that have lead and manganese with them, and that in that carbonate structure, it causes it to fluoresce under UV light. So for them, that's a proxy for mineralization. For them, that's kind of like almost like hitting massive sulfide. It's like, okay, we know it's here somewhere. Now we just have to vector in the system to where we think it might be. And so the program they designed, the 6 holes were quite widely spaced. It was over, I think, a kilometer, in excess of a kilometer of strike length. And they can use different mineralogies to target into where they might be getting closer to the heat source, which is not good in CRDs. You tend to get less silver mineralization, and moving out further to find your optimal silver mineralization kind of zone. And so from that program, I think they've probably seen proximal mineralization, I'm guessing. I haven't seen the results yet, but we hope to have those out in, say, the next month. That would give us that sort of firm grasp of what they did see. So while I'm hopeful they hit massive sulfide, I wouldn't, I wouldn't put my money on it, but they've seen enough to say, we think it's there, and we just got to now refine drilling to find that sweet spot in the targeting. And there's over, just on the one target at the Wolf Fault, it's 2 kilometers of strike length to explore there. So more than enough to fit the existing resource at Silvertip. You could fit that in at Tim, just on what we see so far.
So if I understand correctly, what they did last year was really a geological scout drilling program to demonstrate the concept that this is a fertile CRD system. And because these are high-grade zones that can be quite squirrely, they weren't really expecting to pull a super discovery hole last year, which is why they're not in a hurry to get assays. But they've developed now a geological framework for follow-up drilling and developing a vectoring strategy. But they haven't told you yet what they will do this year. When can you hope them to outline what their follow-up plans are for this year, and how much time do they have left to vest for 51%?
So they've spent about half the $3.5 million earning.
$3.5 million.
Yeah. Okay. So it's I think they've spent just under $1.7 million so far. So they've got another couple of years to do that. They could easily do that this season if that's what they chose to do. But I would suspect they're probably going to do another kind of $1 million program, which if you put that into the dollars, what that would cost us as Silver North to do it, it's probably, we'd probably be looking at spending 1.5, 1.7. They just have the efficiency of scale and everything they're doing at Silvertip itself, plus all that expertise that they can bring to bear on the project. They don't fall in the same pitfalls that say we would, following lost leaders, that sort of thing. So I think that we'll know once we get these results, we can sit down with them, look at what the holes hit, go through the vectoring, and I'm sure they've got their program somewhat laid out. They've told us a couple of the areas where they would go next, and they are, again, more scout holes like what we plan, and I bet those are targeted just off geological characteristics that they've seen so far, and nothing to do with the analytical results from the lab. Just, we saw this tells us that direction's probably, a little cooler, a little further away from the heat source. That's where we want to go test next, is my assumption. So I would think that in the next, say a month to 2 months, we'd have a better handle on what that program is and hopefully have that out to the market.
But this time around, the chances of them getting lucky, like you did last year at Haldane with the main fault, will be much better. So if it is $1 million program, that I think is important. Now, the reason I think it's important, Coeur and Hecla are silver rivals, and when they get to 51%, 3 years to deliver a positive feasibility study with the seasonal nature of Yukon and the permitting headaches that come with doing anything, I don't think that is physically possible. So they may end up forming a 51-49 JV with you. However, you've got this Haldane project going, and with that luck you had last year, being able to follow up this year, you could get some serious momentum going, which would attract the attention of Hecla. And if Hecla ends up buying out Silver North to get access to whatever 30 plus million ounces you've outlined there, that means the 49% partner on Tim would be Hecla for Coeur, which will probably not be a good situation. So you've got this interesting dynamic, these two groups looking at you, and if you come up with more than 30 million ounces, or the potential is supported there, that's sufficient for Coeur to get in there and do standalone. So right now, you're an orphan-type company. You have two potential strategic investors that both have an interest in ultimately owning you if exploration results go as we hope they are. How are you as management going to sort of deal with this rather unique situation?
Well, we love our partners. Coeur's been excellent to work with, and they've been and really very forthcoming with sharing their knowledge, and so as geologists and as as management of the company, we've been very, very happy with that. Now on the flip side, Hecla, who we have no formal relationship with, has been extremely good to work with as far as giving us advice and helping us out with our exploration. They've been great to deal with too. So we love both companies to deal with. They've been great. So for us, it's, we're walking a bit of a line there, but let's face it, this is why we're in the business, to make our shareholders money. And I can only see a scenario there that actually increases value for our shareholders. So I think it's a great position to be in. And, with good results from both, it could get very interesting.
Mm-hmm. There's also the potential that you might end up doing a farm out also on Haldane. But I would be upset if it wasn't a very, very solid, serious farm out type deal. Not the kind that you did with, say, Coeur during the pit of the bear, which, by the way, we're still kind of in a pit of the bear, despite $2,900 gold. But if the funding of these projects both ends up in the hands of big parties that might eventually, either one of them buy you out if success continues on those projects, to keep yourselves busy, do you have other ideas in the world of silver, and what parts of the world would you go to?
Well, I think there's a number of different factors that are not only, like, we're focused on the Yukon. I'm always a little nervous just being focused on one jurisdiction. So we've been looking at projects outside, sticking within North America. And there's some obvious places like Nevada, which are great places to explore. So that's always high on our list. But we are actively, maybe not right now, but have been through the last year looking at other projects. Just, you never know what's going to come along. We also feel like within the silver space, there's lots of opportunities that maybe we're a little under recognized, especially in the realm of CRD systems, where we're as an industry starting to understand that they're just kind of a deposit in a continuum of different deposits. They can be associated with porphyries. So, some of the big porphyry districts like Bingham in Utah had CRDs associated with them. So we're looking at those opportunities that, okay, maybe there's some of that, like the Silvertip district, haven't been recognized yet, or are just in those early stages. And maybe there's some opportunities for us to get in early, not a big expensive deal to be done. And we can bring these along as the next target. So low input at the front end while we're got Haldane focused on. But if that were to come off the plate for whatever reason, as you mentioned, then we'd have this backup that we could go to and move along and be of kind of similar tenor. Like, when we look at something, it's got to be a Haldane or Tim type potential. It's got to have that scale has got to be part of it. We like high grade for just the resiliency. So that's the kind of the criteria we've been using to evaluate other projects. That actually here at PDAC, we'll talk to a few different groups about prospects that we might be interested in. So.
Well, I hope this year you have much better luck than you did last year raising money. We're not yet in a roaring bull market, but all the conditions for it to catch fire, ignition to happen, are there. I have been speaking with Jason Weber, CEO of Silver North Resources in Toronto at the Metals Investor Forum. Thank you, Jason.
Thanks very much. My pleasure.